Very good evening, everyone. This is Rajendran here joining from Market Calls, and welcome everyone to Backtesting to Live Trading session. So in this session, we're going to learn about some of the very basics of backtesting and how and what are the process involved in bringing a trading system from design to backtesting to complete live trading. So that is what we're going to learn in this specific session. Just give me a quick confirmation about the audio and video quality so that we can quickly kickstart with the session. I hope the audio and video quality is good enough to kickstart. All right, great. Thank you, Pankaj. Thank you, Kunal Kishore. Thank you, Mahesh. And thank you, Vinod and everyone for the quick confirmation. And thank you, Samar, Sahu, and Shyam, Krishna. So without any further delay, let's quickly kickstart with the session. So a little bit about me. My name is Rajendran. I've been trading this market since 2006 onwards. And primarily, I had designed 100 plus open source trading system indicators. Most of my trading system designs has been on Amibroker, TradingView, and Python. And of course, I also built some of the modules in NinjaTrader as well. NinjaTrader, some in Excel, some in various other tools. Now, the most important discussion in today's part is what is backtesting, how to do a backtesting, a simple trading strategy, how to backtest using Amibroker, and backtesting a cash market and backtesting a futures market. What is the difference between that? And what is optimization? Steps to consider while taking a trading system live. That is what we're going to learn in this specific session. And yes, so first of all, let's try to understand what is backtesting. See, why we do backtesting, that is the most important thing. And what is backtesting? Backtesting is a process. We'll try to evaluate the profitability of a trading system. So we look into the historical data, let's say last 10 years of data, last 5 years of data, we'll take it up, and then we'll check how the trading system had performed in the past. So first thing that we need to understand why we are doing the backtesting. Many traders, they look only from the profitability angle only. So they want to check whether the trading system is profitable or not. But one thing backtesting will reveal the strength and weakness of a trading system. So some of the trading system might be performing really good and generating extraordinary returns, but at the same time, the risk is also very high. So in terms of risk, how much capital I should allocate, how I can reduce the risk. So these are the very basic things we do the backtesting. We do the backtesting not only to understand the profitability of the system, but also various other factors. Generally, this is a very important thing, backtesting, we cannot ignore it. So any trading system, before you are taking live, it is highly recommended to backtest the system with a substantial amount of data. When I say substantial amount of data, if you are backtesting an end of the day trading system, daily chart kind of trading systems, then at least a minimum you should have a data set right from the start of the exchange till to date. You need to have that data. Or if you are trying to trade an intraday trading system or positional trading system, at least 5 years of data is bare minimum, which is recommended to backtest a intraday strategy or any positional trading systems. Bigger the data, better the information we can collect about the trading system. And one of the many common mistakes most of the traders they do is like they will skip the transaction charges. So transaction charges, like they think like broker charges is very minimal, slippages and other expenses. Like taxation is the very biggest part over here. STT, stamp duty, and all those components, right? SEBI charges, exchange turnover charges. So people, these kind of information will significantly affect the profitability of the trading system. So reasonable transaction cost. What is the reasonable transaction cost? One have to do a small ground study, and then while entering the transaction, while entering the backtesting parameters, the proper slippage controls and brokerage fees need to be included in the trading system itself. So when I am designing any trading system, so these are some of the very basic methodologies one have to pass through. First one is like defining the objective, which symbol that you want to trade, or maybe what time frame you want to trade, Are you going to do an intraday trading system, or are you going to trade a positional trading system? So some people, they don't want to carry forward a position because they might be trading in futures. A big gap up or big gap down can materially impact their profitability. So they might go with the intraday. So their trading style might be a little bit different. So people generally go with the they don't want to take huge risks. So some people they want to do short straddles. So different people will have different objectives. Some people they do it for generating passive income. So they want to backtest a passive income generation strategy. Some people they want to go with trend following. Some people they want to go with mean reversion. So as a trader, what style of trading system suits to you? So that is the objective. First, you have to define which instrument you're going to trade. You're going to do it in commodities or currencies or FX markets or stock market, equity markets or derivative markets. If it is derivative markets, are you going to trade in futures or a combination of futures and options, or option buying or option selling? What exactly you're going to do? What is your ultimate goal to achieve? So that objective has to be very clear. Only then we can design a trading system. We can collect trading system ideas. And from the trading system ideas, we're going to learn coding. In this session also, I'm going to teach you a small amount of, a little bit of coding we're going to teach you. I'm going to design a very simple trading system. And on top of that, we're going to design after the trading system has been designed, it needs to be coded. Once it is coded, it has to be properly backtested. And once the backtesting process is complete, we will be evaluating the strength and weakness of the trading system. Post that, we will try to do the optimization to reduce the weakness in the trading system. Maybe we want to increase the profitability, or we want to reduce the drawdown. So various other factors, people go for an optimization, mostly a fine-tuning process. So optimization is more of a fine-tuning process, so that we want to get a reduced losses or increased profitability. People generally go for an optimization process. Then we will be evaluating the risk. What kind of risk is associated with that strategy? Worst case drawdown, how I can prepare, how much capital I have to allocate. So all those things will be evaluated in this stage. And then system validation. System validation is like kind of a robustness checking, how robust the trading system is. If tomorrow the market conditions are going to change, let's say something like COVID kind of situation, how the strategy is managing the losses or something like that. All of a sudden there is a big gap down of 10% gap down, or big gap up of 10%. Such kind of extreme scenarios, how the strategy is behaving. So we'll be doing a robustness check under the system validation process. A lot of validation processes are there. Monte Carlo is there. So using that, we can validate, and also to ensure that the system is not too much over optimized, it's not curve fitted. Those kind of system validation we have to do. And finally, we will be getting into live testing. So this is still not live trading, it is live testing. Maybe you want to check whether the trading system is executing properly or not. Is it generating properly? If the signals are disappearing, or is there any bug in the trading system, right? So we'll be doing a dry run where we will not be punching the trades, but we'll be kind of a paper trading it is. Or we can also do a walk forward testing as an alternative to live testing, which is also another way to confirm that the strategy is working better. And finally, after all these steps has been passed, then comes the live trading and also monitoring. So if at all any changes is required, again, we have to go back to the trading system phase, and then we have to recontinue the entire process. Now, how to generate trading system ideas? This is one of the major thing many people have, that where I can find ideas, where I can find, is there any resources are there? Of course, mostly books are the major source of resources. Other than books, right, you can find ideas at various places. One is you take self-responsibility and you try to understand the market structure. So how the market structure is. You know, right, we trade a Nifty, Bank Nifty, USD, all these are like highly orderly markets. It doesn't crashes like Adani stock, just like that overnight, just because there is a scam. Nifty it's not going to crash 60% or 70% in overnight, or 30% or 40%. You would have been seen very, very rarely that Nifty would have been crashed like 5%, once in a blue moon, that too, right? So even if there is any scam is running also, Nifty will be very calm. Most of the Nifty or USD kind of things, because they belong to the orderly markets. So trying to read about the orderly markets, how to trade in orderly markets, how to think systematic design in an orderly markets. And then next good thing is like research materials, going through the research material. A lot of research materials are available over there in the internet. So in fact, a lot of research portals are available where you can go and read free research materials. Some of them are premium materials also, like there is a Quantpedia is there where you can find a lot of research materials on intraday trading, positional trading. Some of them are free, some of them are paid. You can go back and check out those things. There you can find a lot of interesting ideas to design your own trading strategy. Or you can understand technical analysis on your own and you can look for pattern setups. Certain setups that you've been seeing repeated patterns. It could be a price action pattern, or it could be a volume pattern, or it could be some sort of a technical indicator pattern, or maybe it could be a geometric pattern, or it could be a pattern like an Elliott wave kind of some sort of a Fibonacci patterns or something like that. So it could be various styles of patterns you can go through that, or it could be a harmonic pattern or something like that. So various patterns you can go through that. Whichever you're comfortable with that, you can consider designing and strategy on top of that. And then sometimes networking with traders, right? Talking to the traders, you might find ideas. You may not be finding ideas just like that. So once you start talking about traders, talking with different traders, different traders will be sharing their different perspective. Mostly you can find traders in carnivals or seminars or sessions. So various places you can find, even in the internet, people share a lot of resources about what they learned about the markets, how difficult the markets are, or some of the edges, what they learned recently, they could have been sharing. They'll be voluntarily coming and sharing in the public domain. So networking with the traders, definitely you can find a lot of ideas. And using the quant methods, a lot of quantitative tools are there, and a lot of quantitative methods are also there. So like co-integration kind of concepts and like machine learning kind of concepts. You can go and learn those things on your own self-interest, and then you can come up with your own different ideas. Or you can explore trading styles. Different people have different trading styles. Some people are option sellers, option buyers, and some of them are hedgers, some of them are arbitragers, some of them are market makers, some of them are high frequency traders, some of them are low frequency automated traders, some of them are investors, they use factor models, right? A lot more resources are there. Right? So you can go and explore various trading style, whichever the trading style is fitting to you. Accordingly, one can go and design their own trading strategies. And then dynamic approach towards markets. Right? Market keeps on changing every now and then. Every now and then, one thing is continuously keep on going to happen is like every month you're going to see a different markets. Every day the markets are going to be different. Every hour the markets are going to be different. Every minute the markets are going to be different. And every second it's going to be different. Every second the markets is going to keep on changing. It's going to change its price. So we cannot look into one single indicator alone. Maybe we need to have one single indicator which keeps on changing its parameter like a chameleon, right? So maybe we need to have an indicator which also changes when the market sentiment is changing. It also should change when the market structure is changing. It also should change when the market overall theme is changing in the markets. The indicator also should change. It should adapt to the different market conditions. And of course, understanding the market sentiment. Again, it's a major thing. Many traders, they miss us in their arsenal. Once you have a fair idea about how to read the market sentiment, where the market sentiment is getting extreme. So it's kind of a crowded behavior. When the crowd is going to go wrong, that kind of things, how we can understand using indicators or various quantitative tools, how we can use it to understand the market sentiment. So those information, how we can convert into a trading edge. So that's again another complete deep portion it is. So these are the ways we can gather ideas. From the ideas, we have to build a mathematical model. Those mathematical model can be from empirical evidence, like research paper, or some simple technical analysis also it can be, or it can be a simple breakout trading also. It can be a simple logic, like an RSI2 kind of simple logic it can be. So it can be any logic. It can be simple to complex. Doesn't matter. End of the day, it should be an idea that works. So any idea that I'm going to generate, any trading system that I'm going to generate, it comes with always a shelf life. Means it has its own, it comes with an expiry, right? Not a one single strategy is going to be keep on going to work forever. So every shelf life of a trading strategy varies. Some strategy will die very faster. Some strategy will be lasting up to some 7 to 10 years. The thing here is like a shelf life of a trading system is decided based on multiple scenarios. A changing market condition, it could change the complete behavior of the trading system itself. Let's say, talking about changing market conditions, recently there is a talk like there could be a change in market timings. So market timings tomorrow, not tomorrow, it's been off late, there's been a rumor has been there. I'm not sure whether it's a rumor or confirmed thing that most of the cash markets are likely to extend from till 5 o'clock. There is a 1.5 hours extension is going to happen, and the futures market will be trading till midnight. So if that is the kind of things which is going to happen, then we may have to compete with different traders. Longer duration markets will change the market condition itself. It could change the structure of the market itself at times. So a working strategy may not work at all in when the market is going to have an extended period of time. So one have to worry about that. One have to start making changes for that. One have to do an analysis. If at all there is going to be an extended time period is going to happen, then what will going to happen to my trading system? And sometimes a trading system would have been publicly getting more and more popular. So more and more traders getting adapted to the trading system. So this is what happened back in 2012-13 kind of period, where many traders, they got introduced to super trend, right? And every other trader has been doing super trend, and they want to do only with super trend only because it is easy to adapt. It's easy to understand what is super trend, how it works. Within 5 minutes, anybody can explain super trend, what exactly it is. And the people started very much fond of using super trend, and they had seen that as a magic miracle. So many traders, they start using that super trend, then also the shelf life of a trading system will come to an end very quicker. Not the very next day itself. Maybe next 1 or 2 years or 3 years, it might be working, but later on, the result of using super trend will not be having a phenomenal returns. That phenomenal returns would have been gone down because too many people started looking into the edge for the same edge. And then sometimes trading regulations. Let's say now the hottest thing in the industry is like a weekly option selling. In fact, in US market, they have 0-day option selling has been started. Tomorrow, if those products has been banned, then weekly options traders have to look for some other methods. So if you remember in MCX, right, they have micros and minis sometime back. Crude oil mini, and now crude oil mini does exist, but then gold mini, silver mini, zinc mini, and then silver micro. So a lot of contracts was being there back then. Like you with some 3,000 rupees, 4,000 rupees, you can trade a future contract in MCX. But now some of those micros and minis has been removed from the system because of the exchange regulations. So because of that, the trader, whoever traded that particular instrument, whoever adapted to that kind of particular style of trading, those traders have to stop trading. So, or maybe they have to look for different opportunities, or they have to look for different avenues. So that way, a shelf life of a trading system where a trader was making money, maybe they may not be able to make because the changing regulations. So that could be a major threat always. Sometimes even they even ban short selling when there is during subprime crisis and all in US market, there is banned short selling. Even in COVID situation also, they try to consider to ban a short sale, right? Even there is a theme which was running among the investors in Indian market, like Band Kar Do Bazaar. So those kind of theme was running in Indian markets. Sometimes even advancement in trading technology, right? So that will make the old practice to go away. Earlier, the market making or arbitrage has been done by humans. Right now, those who have the technological advancement, those who have the HFT machines, so those are the only guys who are doing this. A normal trader is not able to involve in that regular arbitrage or the market making kind of stuff. Only institutions, it mostly gone to the institutional hands. So that's why the shelf life of a trading system, it differs every now and then because of these happenings in the markets. Now let's do one thing. Let's go and quickly get into the building a simple trading system. So first thing first, I'm going to pull up a simple charts. I'll go to file. So in my case, I'm using an Amibroker 6.4. However, you can go and download 6.0 version also. So 6.0, you can go and download directly from Amibroker portal and you can use it for lifetime. Amibroker, why Amibroker is like, Amibroker is one of the fastest tool to backtest. How faster, if you ask me, probably 100 years of data I can backtest within a couple of seconds. So that powerful is what Amibroker is all about. Whereas if I'm going to use Python and all, it's comparatively very, very slow. Python, Node.js and all, even for 5 years of data, it will be like taking some sort of a couple of minutes is what it takes, even 5 to 10 years of data if you want to backtest. But Amibroker is written on C, one of the fastest programming language in the world. So Amibroker, that's why it is so powerful. Now, let me go and write a simple strategy over here. I'll go to File, New Formula. So Amibroker supports a formula language called AFL, Amibroker Formula Language. So it always begins with section begin and section end. It always ends with a semicolon, and each and every line is called as a statement. All right. So I'm going to give a strategy name to that. I'm going to say like a simple Donchian trading system. Donchian trading system. Then what I'm going to do, like I'm going to go to the internet. I'm going to get the Donchian trading system. Simple Donchian breakout trading system is what I'm going to create. So let's go to the internet and then let's try to understand the formula for Donchian channel. So formula Donchian channel, and go and get the Donchian channel's calculations. So it's a very simple calculation only. So you can see that this is how the Donchian channel looks like. So what we're going to do, we need the here is the channel over here, middle channel. So UC plus LC divided by 2. Where UC is nothing but higher high for the last n periods. And then LC and upper channel and lower channel is the most important one. So I'll call it as an upper channel. Upper channel is nothing but higher high value of the high of the last 20 bars. And then the lower channel is nothing but LLV. So LLV is nothing but a function which will look for low values for the last 20 bars. Okay, so the thing here is like this will, I can also write a comment along with that. It's a good practice. If you're a programmer, it's good to go and write a comment. So I'm going to say like Donchian channel formula. So upper channel and lower channel has been coded. Now I can also go back and check. I can go and plot the value. So I'll plot the upper channel. I'll give a name like upper channel, and I'm going to give a color to that. I'm going to say like color green for the upper channel. And I'll also plot in a style thick environment. I'm going to plot with thick lines. Likewise, I'm also going to plot with a lower channel as well. So lower channel, lower, I'm going to plot with color red, right? So along with that, I also need candlestick as well. So I'm going to take it from the ready-made formula, candlestick block with axis. So I'm going to add a candlestick also. So it means I also have to have candlestick, right? So candlestick block is what I'm going to take it and then put it inside over here. So now if I save it and then I'll apply it, it opens a new tab, and then I'm going to open a new tab here. So new blank chart. You can see that it's in a Chrome style tabs. I can have as many new tabs I want. And from here, I simply go on apply. I should be able to see the Donchian channel, which has been built over here. Now, on top of this, I'm going to look for a breakout trading. So what I'm going to look here is like, I'm going to write a formula. My formula is going to go like this. My formula is like, I'm going to say, I don't want to deal with the current upper channel and lower channel because current upper channel and the current lower channel, it fluctuates. So I'm going to give 1 bar delay to the channel. So give 1 bar delay to the channel. Now what does this will do is like, I'm going to say like upper equal to reference of upper comma minus 1 and the lower equal to reference of lower comma minus 1. So this will give 1 bar delay so that during live markets, it will not fluctuate with the live values. The live values will be removed. Only the candle will, the upper channel and lower channel will plot only on the closing basis. So by giving a delay, what will happen? Upper channel and lower channel values got calculated only on close of the candle basis. Close of the candle basis. That is what I'm attempting to achieve over here. Now it is easy to write a trading system over here. So this block will do what? This block will try to plot the candlesticks. Plot the candlesticks. So I have candlesticks. Sorry, this block will plot the candlesticks. And this block will plot the Donchian channel. Plot the Donchian channel. Right now, what I need is like I want to have a trading logic. So trading logic is the most important thing for backtesting. So trading logic talks about when to buy, when to sell, and even when to short and when to cover. When to short and when to cover. So buy sell is nothing but a long entry and long exit. This talks about long entry and long exit. The output of buy and sell is always either true or false. If it is true means the signal is arrived, the condition has been matched. False means something else. So my buy rule is I want to buy when the upper channel is getting broken out. So I'm going to use a cross of high comma upper channel. So here I'm just looking for a breakout. Upper breakout is what I'm just looking around. And I want to exit if the lower channel is getting broken on the downside. So I'll wait for lower channel to broke by the low of the candle. So that way my long entry and long exit happens. For short and for short, this is like a short entry and exiting the shorts. We have two variables, short and cover. Again, short and cover is also either true or false. Here also I'm going to use, I want to short whenever the sell signal is going to happen. So I'll say like sell. And I want to cover whenever a buy signal is going to happen. Okay. So this talks about what? The trading logic talks about when to enter, when to exit, when to enter, and when to exit. Mostly in either true or false terms. Then we have execution logic. Then we have the execution logic. Okay, the buy signal happened. Then when you're going to place the order, at what level, at what price you're going to place the order. So what price to trade? That's what the execution logic will talk about. So here we have buy price. I want to buy exactly when the price is crossing the upper channel. That upper channel is going to be my entry price. So I will be saying like value when buy signal is happening, by that time, what is the price of the upper channel? That is going to be my entry point. So I'm not going to enter at the close of the candle. I'm not going to enter at the next bar open. I'm going to enter exactly at the certain level, right? So my level is what? Upper channel. Where is the upper channel? When the price is breaking out. So when the price is coming and attempting to break out the value, when the candle is breaking that level, exactly that level is what I'm going to enter. That exactly that upper channel level is what I'm going to enter. Likewise, when the price is breaking down the lower channel, exactly the lower channel value is what going to be my exit value. Then only the backtesting report will be proper. So we are instructing the backtester what price to trade, when to trade, what price to trade. All these instructions I'm going to give it to my backtester, right? Or by sell price is nothing but value when sell comma lower channel, and likewise short price equal to value when chart comma, I want to execute at lower price itself, and then cover price equals value when cover comma upper channel. All right, so trading logic is done. Execution logic is done. One more final logic is there, that is the position sizing. So position sizing. Position sizing talks about how much to bet, in the markets. So there is a function called set position size. So here I can define how I'm going to play. So I want to trade a fixed quantity, or I want to take a fixed money. So what are the approaches that I'm going to use? I can say like that. Let's say I want to trade one lot of Nifty futures. So I'm going to trade in Nifty futures, or I'm going to trade in Bank Nifty futures. So let's say I want to trade one lot. I can say like 25, SPS shares. So 25 is one lot. So I want to trade always, every time the buy signal is going to happen, I'm going to buy one lot. Every time the sell signal is going to happen, I will close that one lot. And every time there's a short signal is going to happen, I'm going to short one lot, and cover signal is going to happen, I'm going to close that one lot. So always it's going to be one lot. If that is the case, then how my result will be? So I want to know about it. So in that case, what I will do, I will go back and I will look into the backtesting part. So I'll save this code, file save as. I'm gonna put it inside probably Amibroker backtesting. So I'm gonna say like simple on-chain channel trading system. Then along with that, what I need, I also need to plot signals also, buy sell signal. So plotting buy sell signal is what is required. So I'm having a ready-made code for that. So I don't need to code all those things. So I'm having a buy, sell, short, cover, all those things I'm plotting in the signals. So if I apply the trading system, now I'll go back to the charts. I could be able to see that there are multiple signals it is generating. Multiple buy, multiple sell is what it is getting over here, which I don't want multiple buy or multiple sell. So what I'm doing is like some of the multiple buy and sell, I'm just removing it. I'm going to do an XREM over here. I'm going to remove excessive signals. So I don't want multiple buy signal. I don't want multiple sell signal. So what I'll do is like I'm redefining my buy. I'm going to say my buy equal to XREM of buy comma sell. This will remove multiple buy signal until the next sell signal happens. Likewise, I'm going to remove the sell signal until the next buy signal is going to happen. So that way I'll be able to totally eliminate the signals. Now I can see that I can able to see one buy, one short, one buy, one short. The star represents exit. So it's more of a stop and short and reverse kind of strategies. So the green, this represents buy signal. The green color star represents sell signal. Red color arrow indicates short signal. Red color star indicates cover signal, right? That means what? When green star and red color arrow is happening, what does that mean? It is like I'm going to go short. At the same time, I'm also going to close my previous open positions. My previous buy, I'm going to close it over here. At the same time, I'm also going to go short over here. That's what it means, right? So that is exactly the same thing we are also going to do over here. Now, the coding, the trading system is ready over here. It's a very simple logic only. I saved it in an AFL format. Now I'll go to the backtesting part. So what I'm going to do is I'll go to file, I'll go to recent database. I'm going to open the last couple of years of intraday data is what I'm going to open up over here. So here I'm having the data till November 2021. Let me check. I'm also probably I might have access to an complete database. Sometimes I'll keep my databases over D drive. Amibroker database. I'm having data October till October 2022. That's one of my recent database. I'll go to that folder, ensure that the folder contains that. It's a test database though, but it contains the last 1 year of intraday data updated till October 2022. It contains a significant amount of backtesting data is what it is there. Almost last 12 years of intraday data it does has. Right, so 12 years of intraday data right from 2011 to 2022. That's a significant amount of data for backtesting. So now what we're going to do is, like in this one, we're going to do the backtesting for Bank Nifty. So I'll pick up the Bank Nifty charts over here. So why Bank Nifty? Because Bank Nifty is quite volatile and bigger price action at times happens. Even intraday, you can see like 1,000 points of price action kind of things happens. So compared to Nifty, Bank Nifty is kind of a beast. Let's go on into a 15-minute time frame. Go to a 15-minute time frame. I'll go and apply to the historical charts, apply the indicator. So it automatically comes over here. So this is a past data, but now I want to do a backtesting. So if I want to do the backtesting, what I have to do here is I'll go and send it to analysis. If I apply, it will apply on the charts. If I click on analysis, it opens up the analysis tab, and this is where we can go and do the backtesting controls. So first thing first, I'm going to go and set the current symbol. So the current symbol always points to whatever symbol is there. That symbol will be backtested. Along with that, I'm also going to backtest for the last 12 years of data, particularly on the 15-minute time frame. So I have to set the time frame, not this one. So I have to go to the backtesting settings. From the backtesting settings, I have to go and set the time frame, 15-minute time frame. And I'm going to set the capital as like, I'm going to set like 4 lakhs of equity is what I'm going to set. I'm going to trade both long and short. Sometimes we may want to trade only long, so you can go and select only long only. If your strategy supports both long and short also, then you can go and select long and short. And you can go and set the percentage commissions, slippages, and everything you can go and set over here. I'll press OK. And then let me hit the backtest button. It is going to give me the last 10 years of data. Of course, in my case, right, I'm also having some of the stop loss target enabled. So for time being, I'll remove the stop loss, everything. I'll hit the backtest. This is like 12 years of backtesting data. It happened just with 3 seconds. Imagine that. Just 2 to 3 seconds. Maybe I'll show you again. I hit the backtest, hardly 1, 2, it's there, right? So 12 years of intraday data, I'm backtesting on a 15-minute time frame. It hardly took 2 seconds to complete the entire 12 years of data. If you would have been done the same thing with Python, I'm sure at least it would have been taken a minimum of 1 minute to complete the backtest. So that's how powerful Amibroker is, right? So it has one of the fastest backtesting engine in the world. Anyways, now in the backtest, you can see that it comes with entry timings, entry price. This entry price is based upon our condition. So I had written a rule when to buy, at what price to buy. So whatever the price I am saying to buy, it is the price it is trying to buy exactly at those levels. So that should be technically feasible, right? Then only you can buy exactly at those levels. So the coding also done in such a way, like rationally, we can go and buy exactly around those levels. So the buy price, sell price, short price, cover price. And when to buy, when to sell is what we coded over here. Based on that only, whichever the candle is becoming true, that particular candle, that particular time, it will turn true. So the candle timings also provided over here. Exactly what time, what candle time the price had turned into buy mode or sell mode. When the entry happened, when the exit happened, everything would have been recorded. And finally, we will be getting a report over here, backtesting report. Now, this backtesting report will tell us the overall trading system, what this trading system is capable of. Is it really generating money or not, right? So what is the total net profit? What is the overall transaction cost? How many trades happened? What is the win rate? And what is the how many consecutive winners have been there? How many continuous losers has been there? What is the drawdown? What is the worst case? What is the maximum system drawdown percentage? And a lot more metrics. What is the Sharpe ratio? What is the payoff ratio? What is the recovery factor? It's a lot more metrics which talks about the strength and weakness of the trading system, right? So once you understand the backtesting, once you're done the backtesting, see, backtesting will not guarantee you live results. We know that. But why still backtesting is more important is like then only can clearly understand how you have to going to deal with that trading system, when the trading system can emotionally hurt you, how good you can prepare for that. Otherwise, if you don't prepare for that, when the scenario is going to happen, system will be profitable, but you'll be thinking that you'll be losing confidence in the trading system. So to avoid losing confidence in the trading system, one should completely dissect what is the trading system is capable of. One should have a fair idea about that. Along with that, our backtesting system also generates a clean equity curve. It also generates a drawdown curve as well. So equity curve talks about how profitable the trading system is, how smooth the profits are coming, or the drawdown talks about how much riskier the trading system is, what kind of loss we can anticipate, how frequent the losses are possible. So those kind of things we can anticipate from the drawdown curve. Now, one more settings. What I had done here is like I had done a couple of settings over here. I forgot to tell you. So maybe I'll reiterate some of the settings what I had done. One is the periodicity, 15-minute. Second one is, since I'm backtesting a future mode, I'm enabling the future mode over here. I'm enabling the initial equity. I'm enabling the percentage commissions. So these are the things, basic things I had enabled over here. Along with that, one more important thing, if I'm going to backtest in a future mode, I have to go to the Windows, and from here, I'll press OK. I'll go to the Windows, I'll go to the one of the very important box, interpretation box. So maybe if I close it, I can go to symbol, information. So symbol and information, it opens up a tab. So there we have to go and enter the lot size and margin deposit. So margin deposit here is -20. That means 20%. Minus here represents in terms of percentage terms. So -20 means 20% leverage. 20% leverage means 5 times is the margin the broker gives. So basically Nifty, Bank Nifty will be like 13 to 18% is what mostly, but still it's okay to give some higher numbers. So the round lot size is 25, and I'm also going to trade with only one lot only. So how you can see that the positions, every trade, it is taking only 25 shares. So if you look into the contracts, it always trade 25 shares every now and then in each and every single trade. Maybe we can change the way that we are dealing with the position size. I can also say like I want to have a fixed on money. So here we are having a fixed value. Instead, I can also say like I can remove this and I can say I want to bet 2 lakhs worth of position every now and then. So SPS value. SPS here stands for set position size, right? So position size, I want to trade with the fixed money over here. Now, if I save it and then I'll go back and hit the backtest, again, it's going to take another 2 seconds to do that. But now we can see that the maximum trading it is trying to take up to 2 lakh worth of positions. So sometimes within 2 lakh, it may be able to trade even 3 lots also. Maybe with the current situation, if you look into that, hardly only one lot it can trade with the current situation, because it's already reaching like almost 2 lakhs worth of position. It is already attempting to reach. So it can go and trade only up to 2 lakhs worth of position only with the current scenario. Maybe when the price is very less back then in 2011 and all, it can trade more lots because the Bank Nifty itself getting traded around 10,000. Now Bank Nifty is what, like 40,000 kind of. So that way it will be adapting to that. You will be getting a different equity curve, different metric altogether. Different win rate is not going to change, but the metrics is going to change. Your returns are going to change. Your drawdowns are going to change. So, but all the other metrics, it could also likely a little bit impacted over here. Depends upon what kind of position sizing that you're going to use. Position sizing definitely impacts the risk metrics always. It also impacts the equity curve as well. You will be getting a completely different equity curve picture, right? So one another thing that you need to understand here is like if you don't put the commissions over here, let me make the commissions at 0, right? So right now I'm using commissions, so you can see that there is a commission has been calculated. If I remove the commissions, that is what the mistake most of the traders they do. They will think even a simple strategy like a downchain channel could have generated a very smooth returns, very less drawdowns, but that is not going to happen in real world. Real world, we have to pay to the broker, we have to pay to the government, we have to pay to the exchange in the form of turnover charges, to the government in the form of STT, GST, stamp duty, and every other stuff. and we have to pay to the SEBI in the form of SEBI charges. If you're going to be an investor, you have to pay DMAT DP charges, right? So a lot more components are there. In fact, on top of that, we have IT needs to be filed, right? So without including those factors, one should not blindly evaluate on the backtesting process, right? So doing like this is definitely a deadly mistake, because it might lead to spiked up returns. So one should know what is the right size of commissions or slippages I have to use, 0.02 or 0.03. If it is 0.03, then what will be my impact on my trading system? How my system will get impacted? And how much transaction charges, how much transaction cost I will be paying. So everything you have to evaluate. It's kind of a ground study. Then only you can call yourself like a proper system trader. Like you are doing a proper groundwork. So this is with backtesting the trading system in the futures environment. But let's say if I'm an investor, I want to deal in a cash market. In that case, we cannot short the markets at all, right? So same strategy, how I can backtest in the cash market. That is what I'm going to explain. So I'll go to a different database. More or less, it's going to be an intraday database. Let's say I'll take an intraday database. So let me pull up something like Reliance, maybe. Reliance or Maruti. Maruti is kind of a little bit of wild animal. So Maruti. So I'll go to symbols. I'll pick up Maruti. Same strategy, I'm going to backtest. But the thing here is like, if you go to the information box, no round lot size, no margin deposit is required, because we are not using any leverage over here. It's going to be an investment stuff. And when it comes to the settings, I'm going to backtest the same strategy on a daily scale. So daily scale, no futures mode. It is only equity markets. So it is only long only. Capital is same. So I'm using a 4 lakhs worth of capital. I'm having initial capital. I'm starting with 4 lakhs. And the commissions are going to be different. So commissions will be like, I'm just going to put 0.1% of commissions. Commissions in delivery is going to be a little bit bigger, right? And because there is no leverage, so 0.1 is what a reasonable one I am going to put over here. So the thing that I need to ensure here is period is daily, initial equity, ensure that zero futures mode is disabled, and the position is only long only, because we are not allowed to short. In US market, shorting is possible, whereas in Indian market, you cannot carry forward shorts in equity markets. In US, shorting in equities is possible. You can go and short Apple, and you can keep on holding like an investor, you can short. That is totally possible. In Indian markets, there are mechanisms, but SLB, securities lending and borrowing mechanism, that way is what you have to use if you want to short the shares. Anyways, mostly retail traders are allowed, by default, they are allowed to short only intraday only. Carry forwarding shorts is totally not possible straight away. So now I hit the backtest, and now you can see that this is like almost I'm having the data right from the start of the exchange till 2021. So almost 1995 is what exchange has been started. So since 1995, backtesting like almost 25 years of data. So more than 25 plus years of data I'm backtesting. So it hit hardly less than a second, it brings me the results. Now I can go back and check what is the win rate and everything. I'll be able to back check what is the winning probability. So what is the win rate? How many trades got triggered, right? What is the equity curve and everything? I'll be able to back check like how I had done. This is more of an investor's equity curve. Is it a reasonable trading system? Can I use this trading system or not? How much capital I should allocate? Should I have to change my capital allocation? So should I have to change my methodology? Should I have to compound? So if you want to compound, right, then there is a way to do that. You can use like, I always want to deploy 50% of my trading capital. Again, you can say like SPS % of equity. So if I want to do that, always, how much ever profit I'm having, I will deploy next trade. I will deploy 50% of my money. I'm going to deploy it over here. So that way, it will be compounding as well. So means I'll be able to generate even more increased returns. Same trades, everything is going to be the same. The way I'm allocating capital is going to be different. You can see that every time the number of shares is going to differ every now and then. Every time, whenever there is going to be a profit, the position size also increases a lot. So this is a completely different way in looking at this. At some point in time, it started investing 9 lakhs of positions, means it keeps on compounding every now and then. So equity curve also looking more exponential over here. It may not be smooth, but it will be rapidly exponential if you're going to use a compounding mechanism. So it's up to you, like how you want to backtest, how you want to test a trading system. Do you really want to compound? Then in that case, you have to use SPS percentage of equity. Or if you are a trader like me who want to look into, you want to test the strength and weakness of a trading system, you can go and deploy a fixed money. Fixed money is mostly recommended to trade to backtest in futures or in options or even in equity markets also. For that, you can use SPS value here. So here I'm just putting like 2 lakhs of capital. Always no matter whatever the conditions are, it always try to set up only 2 lakhs of positions only. That way, you'll be getting a reasonable risk-reward ratio metrics. Reasonable, so you can go back and check is the performance metrics is good or bad. So that is how you can backtest the trading system. Now, one of the critical element about a trading strategy is like fine-tuning a trading system. So, as I said here in this code, so I have a fixed value. 20 is a fixed value. So how do I know 20 is the best value? I want to find the best parameters which will give me more returns but lesser drawdowns. So in that case, it may be in 5 could be a better length, or 10 period could be a better length. So if I want to do an one shot fine tuning, then what I can do here is I can go to change it into a variable. I'm going to say like length. I'm going to put a variable called length. I'm going to use a function called param. So it's going to be length. By default, the value is going to be 20, but still I can vary from 1 to 100 with a step interval of 1. So instead of 20, I'm going to replace with length over here. Nothing is going to change. Everything is going to remains the same only. If I run the backtest, I will be getting the same results only. I'll be getting the same results. Like the net profitability is like 177%, right? But here the parameter value is like 20. I can go back and change it to like 10. I can change it to 10. Now, if I hit backtest, I'll be running a backtest for 10. So 10 parameter, maybe the results are not that great. Maybe how about 5? So let me go back and change it to 5. So this is a very manual method of doing a fine tuning. But in Amibroker, there is a fastest way to do that. The fastest way is like you simply change the param, kind of an input control. You just change it to optimize. Now you hit the optimize button. Now this will run the optimization for 1, 2, 3, 4, 5 till from 1 to 100. All the parameters it will try to backtest. So each and every line, whatever you are seeing here, is nothing but the backtesting part. So which will help you to optimize your one, and you can see the parameters at the end, right? So I think I also enabled some custom backtesting. Let me remove the custom backtesting. I'll hit the backtest. So now if I look into that, I'll be able to see that if I hit the optimization, it runs the optimization. Hardly 100 backtest. Imagine each and every line is how much? 20 years of data. 20 into 100 backtest, which is like 2000 years of backtest. I'm running on a end of the day data. I'll hit the optimization. Hardly 1, 2, 3 seconds. 2000 years of backtesting is done. That's how powerful Amibroker is, right? So now I can see all the length over here. I can see that length 1, 2, 3. Each and every line is a backtest. I can go back and check the net profitability, whichever the net profitability is having the biggest one. So maybe I can go back and select, okay, that parameter is like 80. If I'm not comfortable with that parameter, I might want to look for some lower numbers. So maybe 50 is a better number. 50 is having a reasonable profitability. So 50, I might consider sticking around. So I might changing instead of 20, I might want to change it to 50 over here. I'll save it. Now I had find the better parameter. 50 is one of the good parameter. to look into that. Now the returns has been pretty much better. So returns has been better. My win rate is better, right? So number of trades comes down. So it had provided a decent risk reward ratio also. We are able to get reasonable returns also. I'm able to get. So this way we can fine tune the trading strategy in a very simple manner. You just build the trading system. What length you want to control, whether you want to control the length, you want to control the stop loss, you want to control the profit. So which parameter you want to optimize? Like in TV, we'll be optimizing our volume, right? We'll be fine-tuning the volume, which is optimal to here. We'll be fine-tuning the color, brightness, and everything. Of course, modern TV, I haven't touched my TV, but back in those some 10 years back and all, mostly we'll be sitting in front of the TV, we'll be fine-tuning the channels. And we'll be fine-tuning the brightness, color, picture, and everything. We'll be fine-tuning those things. Those days has been gone. So digital TV has been taken over. Now it's automatically adjusting to the environment accordingly. Likewise, in trading system also, we can fine-tune certain parameters to yield a better results. Right? So Amibroker is one of the very, very fastest tool to do optimization. So you can do single parameter optimization, multi-parameter optimization, very easily possible with Amibroker. Can you share Amibroker historical data for backtesting purpose? Yes, we will be sharing to our students. Mostly, we'll be sharing the test database mostly. Ghanshyam is saying no audio. Dinesh is saying no audio. If you are using non-Chrome or non-Firefox browser, it's highly considered to change it to Firefox or Chrome browser. So Mohammed Amin is asking, can supply and demand theory can be implemented for algo trading? Of course, yes. If you have a proper logic is there, then definitely supply and demand can be applied. But the thing is like the building those tools might take time. It may not be done overnight. It cannot be done, right? Maybe most of the supply and demand, you have to sit and understand the principles. You have to understand how to design the strategy. Somebody have to formulate the idea behind that. Some little bit of research has to be done before implementing it. Is it really possible or not? Can I really do it in Amibroker or not? Then after doing a feasible study, then only one have to go and implement. Is it worthwhile to implement or not? So all those things, a little bit of research has to be done before implementing. Just like that, you want to implement, I want to go and implement, that's not going to happen, right? So Shyam Krishna says, like, generally authorized data vendors provide only 20 days of intraday data only. If we newly started using Amibroker, how to get more number of days backtesting intraday data? See, one good thing is like if you have a valid license, all the data will get stored. So more and more incremental data will be added to your machine. For example, I'll show my live database. So this is one of my live data set, which I've been using for quite some time. In this case, I'll show you the Nifty charts. So Nifty chart, this machine has been, since the start of the day, the machine has been running. So 2021 onwards, the data has been running almost 1.5 years. The system has been still running, and all the incremental data, only the incremental data is getting stored over here. Right. So that way, if you have a valid license, yes, Amibroker will start storing the incremental data. It will not download fresh data every time. But if you have a trial version, every time you load, it will load only 20 days of data only. So that way you cannot get more data. So if you want more data, definitely having a license is one thing that one should consider. Amibroker cost. I think Amibroker comes around some $339 or $359. I think you can go and check in the Amibroker portal. It's a one-time license. So Suresh is asking, how do we know that strategy is dead? So how do we know a strategy is dead? That's a very interesting question. See, as I said, shelf life. Trying to understand the shelf life is one thing that is very important. If you are trading a particular trading system, you should have a fair idea how many traders are trading along with that. Right? So if it is uniquely designed by you and you are not sharing to the public world, maybe the shelf life is going to be better. Or if you're going to take any trading system from the public domain itself, maybe the shelf life might be for next 1 year or 2 years. You might consider changing the trading system. Otherwise, it may be an concern that you may have to look into that. Shelf life may be easily gone. For example, there is a strategy called 920 straddle. 920 straddle, left, right, many traders backtested using simple option backtesting platforms. And everybody want to jump into 920 straddles. People implemented variants in 920 straddle. Everyone had also parallelly started thinking about multi-time straddles, 920 straddles. So slowly it will lose its importance. Immediately overnight, it's not going to lose its importance. Maybe another 1 or 2 years from here, maybe the same strategy may not give the similar results. Probably it would have given fantastic results back in 2020. 2021 also reasonable results. Maybe 2022, the performance would have been went down. 2023, maybe slightly improved performance. Again, 2024, the performance would be poor. Slowly it will die. It will not die overnight, right? Same thing with algo also. Algo also, if your trading system is unique, shelf life will be longer. As I said, it is not only depends upon how many traders are using, it also depends upon various other factors. But every trading system will have a shelf life. Right? So sometimes market condition changes, because sometime back in 2008 in Indian market, there are no HFT traders. Now we have different traders because technology changed. HFT players, they got in. Sometime back, market used to start at 10 o'clock, right? Back in when 10 o'clock to 3:30, very short duration. Within that short duration, market have to make a fast trends. So within 10 to 3:30. So it's a very compressed timing. Within that, market have to trend. Now what is happening? 9:15 to 3:30. So market can make it a little bit slow also. Market can irritate much more and then it can move. But tomorrow, if it made to like 9 to 5 in equity markets, maybe more rotations and more cheating, and then slowly it moves. But tomorrow, if the market in futures would have been made like 9 o'clock to till 11:55 midnight, then mostly market might be running sideways. Suddenly it spikes up and it goes sideways and slowly it falls. And the same movement would have been done, but in a different way, because the duration has been changed. It's going to impact your trading strategy, right? So always one thing is going to be there when it comes to systematic trading, exploring new edges, exploring new trading strategies. That is always going to be there. That is going to be a part of the trader's lifestyle, whether it is algo or non-algo. You have to keep on coming up with new trading ideas, and that's going to be an endless game. How much time does it take to learn Amibroker? Probably I would say like a month. You can definitely have a fair idea about Amibroker or Amibroker programming. Sham is asking, do I need to take a daily backup? Of course not. Maybe a monthly once. If you're going to take a backup, that is more than enough. So Satish is asking, is it possible to backtest intraday options in Amibroker? Absolutely, it is possible. Amibroker is highly capable of doing anything and everything. But if it is going to be a simple straddle strangle kind of backtesting, definitely it's good to rely on some option backtesting tools like QuantMan or StockMarker kind of things. If in case you have a complex trading strategy, then only it is worthwhile to explore Amibroker. All right. Do we have a course for Amibroker programming? Of course, yes, we do have. Probably we are coming up with an 75 hours of mentoring program called the Quantzilla. You can go to webinars.com. Under webinars, you can go and check out the courses. So if you go to the webinar section, we've been coming up with next month, a mentoring program is going to start from 6th of March onwards, Quantzilla 3.0. So where you can go back and check out. We have 2 editions. One is basic and another one is basic plus advanced. So you can go back and check out those course contents there. All right. Anyways, so let me say thank you and thanks for coming by and attending this session. I hope you would have liked this session. If you would have really liked, kindly provide your valid testimonials. You can send your testimonials over here. You can go to webinars. From here, you can go and reach backtesting to live trading. Scroll down. There will be a place to add your reviews. You can give your ratings over here. If you really feel the course is not covered enough topics, you can also consider giving a comment so that in next session, we'll try to make it up. What you learned and what you want to learn, you can give in reviews. So that will help us to fine tune ourselves better, like an Amibroker optimization. So see you in the next session. So next session will be conducted on Saturday, same timings around 7 p.m. 7 to 8 p.m. is what we'll be mostly doing every weekend live sessions, mostly on various topics like Amibroker, market profile, and order flow. If you're really curious to know, you can consider always fine tune to the webinar section. Any latest webinars will be updated over here. See you next time. Thank you.